Hello friends, today we are going to talk about handling objections related to real estate. How many times do we listen or hear this objection about real estate? Most of the times. Most people think that real estate gives a very good return and therefore they would like to compare life insurance and see that in comparison to the real estate they get very low return. Secondly, insurance is just a piece of paper. Real estate is something very real. It's tangible. It can be seen. It can be shown. And that is what most people are interested in. The first thing very clearly is that we have to make a distinction between these two asset classes. Okay, these are called as different asset classes. So in the life of a customer, all different asset classes play very different roles. It's just like an orchestra. It's just like an orchestra where you have very different instruments which creates a symphony. If you remove any instrument, then the whole idea of that symphony gets lost. And similarly, in the life of customer, all these instruments, all these asset classes play different roles for different kind of goals. So customer has goals and we should always talk to customers about their goals and related to the asset class, which asset class will help them to achieve which goal, and that is what very clearly we have to establish. So life insurance on one hand is something where you pay in installments to create a capital in the future or in case of death, whereas in real estate you have to pay upfront the capital and then you might have to take a loan. So all these things, this is a major difference between real estate and life insurance. The other thing is very important is that as far as real estate is concerned, it is something which is needed by the client as well as life insurance is needed by the client. So let us not try to convince the customer for life insurance against real estate. So normally what happens is when we start talking to customers, trying to explain to them, then we start talking about how life insurance is more superior to real estate, and that is where the mistake occurs, because most people won't agree to whatever you say, because in their mind the idea of real estate is something very different, and therefore if you try to pitch one against the other, it is going to get you into trouble. So therefore very important is that you should understand that the client needs a real estate for certain kind of objectives of his life. He requires life insurance for certain other objectives of life, and this has to be very clear in our mind. So let's not pitch life insurance against real estate. But there are certain things which are very important and which I would like to tell you today of how you can pitch the real estate and why real estate as a comparison to life insurance. So again, I'm be very clear. I am not saying that nobody should have real estate. I am not saying that real estate is not good. I am just saying that real estate has a certain purpose to play in the life of the customer. Like if they don't have their own house, they better buy a house, because that's very, very important. But if they are buying a house for some goal which is very important, then they have to be very careful. So we can actually divide goals into two types. One is called serious goals, the other is called leverage goals. Serious goals are those goals where the customer has to have the corpus in liquid form at the time when the goal gets done. Like for example, the children marriage or children education. I have seen many customers buy real estate for taking care of their children's education needs, but that's not correct, because education is a serious goal and it has to be funded with a liquid investment. It can't be funded with an illiquid investment. So real estate is illiquid. Illiquid investments can be used for leverage goals. So what is a leverage goal? Leverage goal is anything which has nothing to do with your needs. It is more of wants. So serious goals are wants, like children education, like retirement, like children marriage. These are very, very interesting, important and interesting goals. Whereas on the other hand, leverage goals is maybe to go for a travel abroad or to buy maybe a car, a better car, or things like that. Those are the leverage goals. In leverage goals, if at all by any reason, for any reason, if the customer does not get the capital at that point in time, it's okay. There's no problem. But as far as serious goals are concerned, you need to have that money at that time. You can't ask your daughter to wait for her marriage, because you can't sell that property, and property is illiquid. It can't be sold at the time that you want. It can be sold when the market is the market is very like it can be sold only when the market is ripe. Real estate can get you stuck, like the subprime crisis, where it takes a long time. I had a very good property and I wanted to sell it. I expected to sell it in 6 months, but it took 18 months. Now, God forbid, that was not for for any of my serious goals. But if it had to be for a serious goals, I would have been stuck. I would have to take some loan and things like that. Now, let's come to the main point. So this is where around which you have to talk about, and that's why I wanted to be very clear that please don't pitch life insurance against real estate. That's not correct. It's not a real thing. So we have to talk about what is the kind of goal. So why are we talking about life insurance? We are talking life insurance because the lifestyle of the customer's family has to be protected in case of something unfortunately happening. And I will talk to you about something very interesting later. The first thing is that I give certain examples from Indian history, because that's very important. So the first example that I give to the client, because please remember, in a discussion, when you start with a discussion and two people have their point of view, and then when you're discussing, it is very likely that you might get into an argument, because each one of us wants to hold our position. And because we want to hold our position and we want to defend it, then there is very less chance that both the client and the agent can come to a common ground. And therefore what I do always is never talk to the customer in the sense of what he is objecting to, because make the objection the objective. That's very important. Make the objection the objective. And therefore I would like to talk to them something different. I take them to the history of India. So let's take the first thing. When actually India got independence, then there were a lot of princely states in India. There were a lot of princely states, These had their own rulers and they had their own kingdoms. And Sardar Vallabhbhai Patel, who was the minister in the cabinet of Pandit Jawaharlal Nehru, was tasked with this duty of getting all the princely states merged with the Indian Union. And therefore Sardar Vallabhbhai Patel had to go and he had to convince all the princely states, instead of operating independently as small kingdom, it's better to be part of the Union of India. And that is where these princely states were merged with India. But do you know what? When India actually took over this, they were given a purse. It was called as a princely purse. And this purse was given to them. It had no kind of connection to the value of what was taken over by the government. So therefore, if the government wants to take over some property, then this is one of the thing that happened, where very clearly government took over this. Then we had during the tenure of the Prime Minister Lal Bahadur Shastri, where he had come out with this slogan called Jai Jawan Jai Kisan. So basically for the Jawans and for the farmers, he came out with this, and he had actually that time taken over the land from all big zamindars and given it to the farmers. And that's what Jai Jawan Jai Kisan is all about. So the whole zamindari system was challenged, and Lal Bahadur Shastri said the land should belong to the tiller and not to some third person, and therefore this land was acquired from the zamindars and given it to these kisans, these farmers, and that is how lot of zamindars actually lost their land. Indira Gandhi came out with a slogan called Garibi Hatao, and she actually what she did was she started this system especially in Mumbai and all over India, where people who were staying, the tenants were given rights to this houses. And today also there are a lot of people who are staying in property which is owned by somebody, but the tenancy rights came into the picture, and they made part owners, the tenants, the part owners of this property. And therefore there are a lot of people it's called the pagdi system. If you talk about it in Hindi, it's called the pagdi system. So the pagdi system is nothing but that their ownership, part ownership or major ownership of the property was given to the tenants under the Rent Control Act and various other things. So again, lot of people lost this property, because India is a republic, it's a socialist republic, and towards the socialist republic agenda, if the government wants to redistribute wealth, then they can take charge of this and they can acquire this property. Now what happened? We have something in Bombay called the Western Express Highway, just few years back. And this Western Express Highway, the government of Maharashtra wanted to increase it and make it into a 6-lane highway. It was just a 4-lane highway, and they wanted to make 6 lanes or 8 lanes out of it, and therefore they had to actually extend the highway sideways, due to which many people had to lose their workshops were there. There were a lot of shops, and there were a lot of small kind of 2-floored houses, and then all these people were shifted to a very different place. They lost their business, they lost their they actually had to go to some very remote place, and the government acquired this in the name of expansion and development and infrastructure development, which was of course very much needed, as the Western Express Highway had become choco-block. So that is one more example where the government acquired this. And my dear friends, all of you know that 2008, the subprime crisis which happened in US, and what happened during that time? During the subprime crisis, lot of people had loans on their properties, but the property values started falling below even the amount of loan amount of loan that people had. And because of that, there were news, and I think it was a reality, where many people just took the key of their house, went to their bank and just gave them the keys and told them to kind of acquire the house, because the value of the loan that they had to repay was much bigger than the value of the house. So in such situations, like the subprime crisis, the other situation was the Great Depression in 1929, when again the whole property prices had fallen down, and therefore it is very dangerous actually to keep property as a asset for some very important goals like education and like retirement. So government rules are there which can actually tomorrow acquire things and make take the property away from this. The other thing is that nowadays, if you look at fraud, lot of builders, of course now we have a regulator who has come, and I do hope and I pray that these kind of things may not happen now. But you see in India, the very recent Supreme Court direction to demolish the super tech, that 40-floor building, because it was not done as per it was the regulations were flouted and lot of rules were flouted, and therefore people who had bought this property now cannot stay. They will have to wait for all this settlement to take place, and the builder, from where is he going to make this payment for so many people? So after having fought for so many years with the court, the Supreme Court finally decided that this has to be demolished. God forbid it can happen to anybody and to any kind of this. We have recently the Bombay, the Coca-Cola example. The Coca-Cola this thing where lot of flats, suddenly the Supreme Court came with a decision to actually ask them to demolish it because they were illegal. And that is why we have to be very careful. There can be any time in the future these things can happen. But yes, property is a very good investment. Property is a good asset class. We need to have it, but don't put all your eggs in one basket. And that is what I tell the customer, that you need to do an asset allocation of the illiquid asset and the liquid asset. The liquid asset at least has to be 30 to 40% of your total net worth, and illiquid assets can be between 60 to 70% of your total. So if the customer is already overplaying in the real estate, then I think it is always better to tell that they should also now start looking at the liquid asset. Life insurance is complete different game, and life insurance is about actually protecting the property. And at the beginning of the video I told you I will give you an example. I had gone to the 1997 MDRT conference. That was the first conference where we had 20 of us from India, including Bharat Parekh and a lot of other agents, and I was very lucky to be with Bharat Parekh. And when we had gone for this convention, I remember there was one lady, widow, who was called to share her experience about the death of her husband and how life insurance helped her. And Betty, in that speech that she gave, she very clearly mentioned that her husband was not at all for life insurance. It was just because the agent was pestering him and continuously calling him. They just bought a policy. But actually she said that my husband was overexposed into real estate, and that real estate, she didn't have money at the time when he died. She had to borrow from her mother's credit card so that she could have the funeral of her husband. And she had to also then put lot of lawyers, because the property was in different states, and the people who were tenants were not ready to leave the property, and she had to really spend 2-3 years of good money to get all that back. Of course they got it, but she had to spend a lot of money, and in the intervening period the family standard of living was not taken care of. Life insurance will take care of all such situations. It creates cash when nothing exists, and therefore we have to very strongly pitch about life insurance to people, because it plays a very different role to real estate. Thank you.